morning. Today, diving in a little bit of these hot topics here this morning. We do see um, corn, beans, all a little bit bid here with energies. First, China's corn imports are expected to plunge to 9 million tons for the 24-25 crop year. This marks the lowest level since 1920, less than half of last year's imports. The drop comes as China aims to protect its domestic farmers by restricting grain imports and using quotas to booster local prices. Economic headwinds in China are also contributing to weaker grain demand, which could have significant impact on global grain markets, of course. Meanwhile, we have non-farm payrolls coming today. Let's switch over to the mini S&P. We were a little bit lower this morning, but kind of bouncing back up here. Payroll growth is expected to ease to 165,000 jobs in December, down from that surprise 227,000 gain in November. Goldman Sachs, however, is more bearish, forecasting just 125,000 jobs. Due to slowing employment growth, wage pressures remain elevated, with average hourly earnings expected to rise 0.3% month over month, 4% year over year, signaling a cooling but still strong labor market. The unemployment rate is expected to hold steady at 4.2%, though Goldman anticipates a slight increase of 4.3%. How does this impact the market? So we're looking for if you have a stronger number at coming in over 200,000, 220,000, this could definitely spark some inflation concerns, pushing bond yields higher, triggering, a potential sell-off where we could see, the markets coming back down below, making new lows here. A print, this is kind of like a Goldilocks scenario, a print between 140, 180 could likely support the Fed's view about a soft landing, boosting equities, keeping interest rates expectations kind of checked here. And we kind of just probably grind back up here. But, a weak print, especially if the unemployment rate rises and wage growth accelerates, could reignite concerns about stagflation, leading to losses, between 25 and 75 bips. And we're still within these ranges here. But, really what's got moving this morning, we're looking at crude oil. So Brent crude, went up over 9% in the last 3 weeks, reaching $79 a barrel. But looking at the WTI here, we traded up to 76.70 on the overnight. This is, fueled by expectations of tighter sanctions in Russia and Iran, cold weather boosting fuel demand, and ongoing concerns about low stockpiles. Analysts are predicting a 1.6 million barrels per day increase in global oil demand in Q1 of 2025, driven by heating oil and kerosene consumption. Both corn and oil markets in influx. These trends are likely to ripple through global trade and inflation concerns. So keep an eye on these developments as we keep moving on in 2025. Good morning. Today, diving in a little bit of these hot topics here this morning. We do see corn, beans, all a little bit big.